We're back now with breaking economic news. The monthly inflation report out this morning giving us an updated look at the state of our economy. So according to the Consumer Price Index, prices actually unchanged from September to October, when it was up 0.2% in September from the month before. Here's the big number we worry about. Overall, 3.2% year over year. Breaking it all down for us, NBC News business and data reporter Brian Cheung and Investopedia editor-in-chief Caleb Silver. Good morning to both of you. So Brian, let's start with you, economists. We're expecting maybe a slight increase month over month. So how do consumer prices in October compare with September and previous months? What should we know about that?
Yeah, well, as you mentioned, compared to September, prices went sideways. They didn't really increase or decrease overall. But again, there's a lot of numbers here, so let's contextualize it, because what we want to really look at is not necessarily the monthly change, but the yearly change. So prices in October, 3.2% more expensive than they were in October of this time last year. Now, if you look at the September to September period, that was 3.7%. So the rate of price increases is slowing, although prices are still going up. Again, that's a positive figure, but it's encouraging to see that the rate of inflation has come down. Again, recall, in the summer of last year, this rate was somewhere closer to 9%. So the rate of inflation is slowing, although economists really want to see this number a little bit closer to 2%, Joe.
So, Caleb, what are the headlines here, especially as we get into the holiday shopping season?
Yeah, it shows us that it is cooling a little bit, inflation. And remember, it was also 7% at the beginning of the year. So we're down in this 3% range. When you look at what's more expensive, and Brian will dig into it a little bit more, it's still shelter prices and food prices. We're still paying more for that, and we should expect that. That's going to be persistent inflation in those categories. But that 3.2% number is important. Why? Because that's where consumers think inflation is going to be for the next 5 to 10 years, according to consumer Fed expectations of inflation looking out. So we're kind of where we think we're going to be, although, as Brian mentioned, the Fed wants that at 2.5%, 2%.
Got it. So, Brian, let's break down some of the numbers by category, any areas that are considered winners or losers.
Yeah, well, what we're looking at here is 3 main categories: food, energy, and shelter. And I want to highlight these are monthly changes here. So what I'm talking about is the difference between September and October. The food price index actually went up by 0.3%, if I can start to write. There we go, 0.3%. Energy prices, interestingly, went down by, get this, 2.5%, owing in part to prices at the pump declining over the month. But shelter, this is the biggest expense for most Americans, actually slowing their pace of price increases, only going up by 0.3% in the month of October. That's a slower pace than the 0.6% we had seen in the month of September, which is certainly encouraging given that's such a big expense. Now, on a real-life basis, let's take a look at some average prices. Egg prices, if we're comparing over the year, $3.50 almost last year. It's actually gone down to about $2.07 now. And gasoline prices, as of the average of all types, down to $3.91. My handwriting is really going off the rails here. And then $3.93 for milk, and then bread going up. So you can see in some price categories you are seeing prices increasing, like bread, but again, you're seeing other categories declining, which I'm sure is welcome news ahead of Thanksgiving.
The eggs stand out because we did 4 million stories on eggs, about a year ago. So it's great to see those prices going down. So, Caleb, we know the Federal Reserve has been not doing interest rate hikes over the last few meetings. They'll meet again, in about a month? So
yeah, 29 days, 5 hours, and 30 minutes.
You always have the countdown for us. So what can we expect then when they meet in about a month, especially with the holidays coming?
The expectation is that they will hold again, even though they've been talking tough about potentially having to raise interest rates to finally tamp down inflation. I think this report tells us that they're going to be done for this year. And now the drumbeat is getting louder about rate cuts next year as the economy slows. All these rate cuts have really slowed the economy, not necessarily inflation. They've slowed the pace. But they're talking now about rate cuts potentially next year. So probably no rate cut in December. We're probably where we are, the terminal rate for the Fed. And that's good news, actually, for the stock market and for consumers.
We talk about this goal of 2% inflation year over year. Is that possible? Do you think we can actually get to that?
Well, what's weird is it took forever to get to 2% up until the pandemic and post-pandemic. And now trying to keep it down back to 2.5%, that's hard. So we have this persistently high inflation in that 3 to 4% range. This is probably where we're going to be for a while.
All right. Brian Cheung, Caleb Silver, our economic dream team, breaking it down for us. Thank you both. Appreciate it.
Thanks for watching. Stay updated about breaking news and top stories on the NBC News app or follow us on social media.